All right, we're live. So welcome back to Dapp University. So we're going to talk about something pretty major for crypto in this video today. All right, we have a historic moment, a historic day for crypto that people have been waiting on for a very long time. And we're getting clarity on this since our live stream that we did last Friday on this channel, okay? So we're talking about what that is, why it's so important, why you need to understand it. We're going to look at a lot of other news updates that have happened in the space again since that last stream on Friday. Check out some of the crypto markets, answer some of your questions, and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, nothing I'm saying in this video is designed to be financial advice, and there's lots of scammers down in the comment section below. Like, just ignore them. I'll never give you my phone number or ask you to invest with me. So we got people jumping in the chat here. Let's just go ahead and take a look here. I got Culture Highs. We've got Ajit, Jake, Alberto, Automatic Beats, Scott, CodeChap, THX Like This, Jamma Beans, Patrick, Camille, welcome. All right, so let's go ahead and jump into this. Let's talk about this historic moment for crypto on the whole, particularly with Bitcoin, and why you need to care about this, okay? Because this really is a pretty big deal in my opinion. So let's go ahead and pull this up on my screen here. So the first Bitcoin futures ETF is to make its debut Tuesday on the New York Stock Exchange, ProShares says. So we've been talking about this for quite some time now. People in the crypto space have been talking about a Bitcoin ETF for years and how this could be a huge moment for Bitcoin to bring new capital in the space, all kinds of stuff. We've seen how other assets have performed in the past whenever ETF approvals have taken place, particularly gold's a notable example. What happened to that over the long term, all that type of stuff. And so for Bitcoin, this is something people have been waiting on for a long time, okay? We're starting to see this news actually make its way outside of just the crypto circles. It's not just, coming up on like CoinDesk. It's coming up on pretty major publications. We're seeing, let's just see here. I had another link pulled up here. We're seeing it reported in the New York Times, all over the place, okay? Lots of people are talking about this Bitcoin ETF. Now, let's talk about the implications of this and break it down and understand sort of the hairy details, so to speak. So this is the first of many ETF applications that has been approved, okay, in the U.S. And one thing to understand here, this is a futures ETF. Now, there's different types of ETFs that could get approved. We could have a spot ETF. This is not for all cryptocurrencies. This is just for Bitcoin in particular. But this is a big deal, in my opinion, for a couple reasons. Number one, the reason people have been talking about it for a long time is bringing new capital in the space. There's still a large, cross-section of people who would purchase this through an ETF. It reduced it for whatever reason, as opposed to actually buying it, or in addition to buying it, just with a Coinbase account or some Binance account, or some other centralized exchange account, whatever it is. So you're getting access to more users of crypto. Another thing is it gives cryptocurrencies in general more legitimacy. Okay, I think people inside the crypto bubble take for granted like how much skepticism there still is outside of this space for crypto. If like you're newer to this space, you might be, acutely aware of this because you may still have some of this skepticism. But there's a lot of people, normies, so to speak, who still think that Bitcoin is like weird or a scam or like don't trust it. But when you have ETFs like this, it really helps that problem quite a bit. And the last big thing is just regulatory clarity, okay? Because that's one of the biggest fears, I think, of people participating in crypto, especially larger players like institutions, for example, is there's a big regulatory question mark around crypto in general. Now, that lack of clarity, is not just saying that a Bitcoin, ETF approval makes all that go away, but it's a vote in the confidence in the right direction, okay? Particularly for the asset Bitcoin itself, right? That doesn't necessarily apply to, Ether doesn't apply to DeFi projects and tokens, all this type of stuff. But for Bitcoin in particular, it does really help that problem quite a bit. So the other thing I think is be a big deal is because this could really be the first domino that knocks a lot of other dominoes down, okay? So, like I said, some people, there's lots of naysayers out here that think this approval is sort of like not that big a deal because it's just like this one futures ETF, and there's lots of other ways that people can buy Bitcoin. Why do they really care about buying futures ETFs? All that type of stuff. But I think the counter to that is that it can be a domino that knocks a lot of other dominoes down. So let's talk about what those could be. Well, I talked about how there's lots of other ETF applications in the pipeline, and there could be other reasons why those may or may not be approved. But the fact that we now have the first one approved, it stands to reason, at least as I would see it, that the other ones, you would be able to use some of that progress basically to speed up the process or expedite the process of the other ones, okay? So, inevitably, like I said, I don't have an inside track to understand everything that goes on when this approval happens. I don't pretend to be an expert on this particular topic and the process that, this has to go through in order to become, fully legitimate. But it would stand to reason that some of that work can be, transferred, and that progress can be transferred to these other ETF approvals. If somebody has a definitive response to that thinks that's not the case, then let me know down in the comment section below. So that's one big thing, and that can knock a lot of other dominoes down. Now, one thing that's also really important is we're seeing lots of other ETF applications pile in, okay, and how this could quickly transfer to other assets as well outside of just Bitcoin, and why that's another reason why I think this is a big deal. So, taking a look at this, so it's official. A $38 billion Grayscale Bitcoin Trust will file to be converted into an ETF, okay? So if you're not familiar with Grayscale, basically, it's a trust, or it's a fund that has a trust that buys Bitcoin with this trust, and then you purchase shares in that trust in order to get exposure to Bitcoin, okay? Now, Grayscale also has lots of other products. It has, trust for other cryptocurrencies, like Ether, for example. I don't have the full list pulled up here, so I don't want to misspeak about like which currencies they support. But there's lots of cryptos that they support, and so this could be a situation where, say Grayscale gets a Bitcoin trust converted over to an ETF. Then what's going to happen? Like, could that make it a lot easier to get some of these other cryptocurrencies that have this clarity converted over to ETFs as well? And so this really could be see a snowball effect where we see just crypto ETFs across the board approved for this type of trading, okay? And this could be the first domino that really helps knock those other dominoes down. So I think it's no accident what's happening to the crypto markets in response to this, okay? Like I was talking about on this channel, markets are very complicated in the sense of there's lots of reasons why prices could go up and down. But I really don't think it's a coincidence, okay, that, the markets are nearing all-time highs in most cryptocurrencies in the majors, right? And in response to this news, okay, or, coincidentally with this news. I don't think it's just sheer coincidence, okay? Now, that being said, I don't think that, Bitcoin price, reaching all-time highs is because, instantly and approve, we're not trading on this thing yet, so it's not like funds are coming into the ETF and are supporting this price level. That's not necessarily what I'm saying, but I do think we are seeing lots of interest and bullishness on Bitcoin, the asset itself, for all the reasons that I talked about. The legitimacy, is there's some speculation going on here, but I do think that we are going to see a Bitcoin at all-time high, likely, keyword likely here pretty soon. Nobody's got a crystal ball, but it's hard to really be bearish in this environment, barring some other, major thing that nobody knows about, sort of maybe black swan, so to speak, sort of ending the party early. Now, that being said, some people, are speculating about a buy the rumor, sell the news situation where they sell the news on the ETF. When we see it come out, but I don't know. I'm kind of leaning in the other direction, right? So one thing to think about, if we do see major cryptos start to break new all-time highs pretty soon, which I'm leaning in that direction, again, not financial advice, but that is the direction that I'm personally leaning. I do think that we could see crypto get pretty crazy again. And I watch a lot of other metrics to kind of think about, what's going to happen here in terms of retail participation, all that type of stuff. One of them is Google Trends, and so we can actually kind of take a look on that. So basically, you have to think about who buys crypto in the first place. There's lots of people. There's retail investors. Basically, this is going to be like people like you or me, right? So basically, just people and that could basically span a huge, like a range of people. Like some people who just go on Google for the first time and go, how do I buy Bitcoin? And they might find a video like similar to this, or make a blog post or something that refers them to Coinbase or Binance, and they just sign up and they buy crypto for the first time. Is that person, all the person maybe who has been in the space for a long time and maybe has purchased crypto? That's a retail investor versus an institutional investor who's investing on the behalf of an institution. It's hard to define the word without using the word itself, but that's what it is. So we talked a lot about institutional participation in cryptocurrency over the past year or so. It's been a major theme of this cryptocurrency bull run. It's super important because basically institutions can buy in size in a way that retail investors can't, to the tune of billions of dollars. We saw Tesla buy $1.5 billion of Bitcoin for their balance sheet earlier this year. We've seen lots of other major players get in with huge amounts of money, so they can move the needle a lot faster, and it only takes a handful of them to really do that. And now, but with retail, we do see retail participation being a pretty big factor in sort of the froth of what's happened in the markets. So one way I try to keep track on that is with these Google Trends. And I think, retail investors kind of have a little more predictable behavior in terms of what happens, what they do at different periods in a market cycle, okay? And one of those things is retail tends to start really paying more attention and participating like once we break past all-time highs, and that's kind of when things could get crazy again. So that's what I'm watching out for, is basically as soon as we get a Bitcoin all-time high, I would be looking for other things like Ether and others to start making new all-time highs as well. And kind of once that starts to happen and those dominoes start to fall down, I would expect to see, these trends start to kind of grow faster. And they've already, looks like they've already kind of reversed a little bit. Maybe they've consolidated and bottomed. These look pretty close to the cryptocurrency prices themselves. Like you could overlay these and they maybe kind of lag a little bit, but you can definitely check this out. So I'm looking at Ethereum, Bitcoin, crypto, and NFT. All right. And it's crazy that the NFT is actually increased and started to match the Ethereum volume itself. So part of the point here is we're still less than half of the search volume for like keywords like crypto, Bitcoin, and Ethereum than we were back in May when everything peaked like crazy. But we're basically at all-time highs for NFT. Not quite, but close. This is Bitcoin's getting 100K. I think so, yeah. I don't exactly know when, but we'll see. Do I think that ETH will reach 10K this market cycle? I think it's looking more and more likely that that's going to happen. Again, not financial advice. Nobody's got a crystal ball, but it looks more and more likely. All right, so let's look at some more pretty crazy stuff that happened that I think could be catalyst for a huge change in the crypto space. Because at the end of the day, what I'm really, really interested in for crypto is what you can do with the technology in and of itself. Now, talk a lot about cryptocurrency prices, because at the end of the day, the value that you create, that technology can accrue back to the cryptocurrencies themselves, because the cryptocurrencies integrate with the technology. And as you create technology that actually solves real problems, creates demand, then people need the crypto to use that technology, or they get benefited with the crypto by using the technology, and that's going to have an effect on the price. So one pretty cool piece of news that's come out that could really affect what's possible with this technology, or be a catalyst to actually adopt some of this new tech, is what happened with Steam. All right. So Steam basically banned all games that utilize blockchain technology, NFTs, or cryptocurrency for the platform. Okay. So we've seen stuff like this happen with other like marketplaces in the past outside of gaming, where basically they just ban anything crypto related. And yeah, I would say like long term, I don't think this is a good play. And this could be a huge catalyst because, I mean, I don't think it's a good play at all, but I think it could be a huge catalyst for basically like something rival to come up that could actually start to get, adoption. Yeah, it's absolutely crazy. Censorship resistance is something that is a huge benefit of blockchain technology, okay? Basically, creating things where you can create protocols that let people do things, and they don't have this centralized middleman control to just like ban XYZ thing. Now, that being said, here's a really interesting way to think about censorship, because we've thought about this already, which is how do you keep the good parts of censorship but stay away from the bad parts? Well, I think the answer there is to let people choose what they want to be censored, opt into censorship, basically. So I'll give you an example. So like, let's talk about social media, because, there's lots of people, racing to build some sort of decentralized social media application, decentralized social media protocol, because censorship is a problem with social media. We've seen it a lot over the past year. Or two even, right? And more so people are starting to really become aware of it, all right? So, but, on social media, some people think that some censorship can be a feature, not a bug, right? Let's say that what if you want to censor out, adult content on your social media or whatever, or you got a kid or something like that, right? There's lots of things that you may not want certain users to see, but part of that's opting into it, okay? So not necessarily that it's, and other social platforms already do this, but it's still centrally controlled. So what you could do is basically have a protocol that's powered on the blockchain itself that actually just implements all the content for the social media, and then you have basically the client or the app that pulls that information, and that's actually what implements the censorship, and you could control like what happens to the application. And if that particular centralized application interface creator creates it in a way that you don't like it, you could have basically a competitor that pops up, but it still uses the same protocol, okay? So there's competition at the app layer to, do what users want at the app layer so that they can, participate how they want to. So that's one way to do it. And another problem with censorship in social media is also the algorithmic curation. So like, if you see, this happening over here, like what's happening on Twitter, this like, a couple things. What's trending on Twitter or what just pops up in my timeline. A lot of that Twitter just decides to show me what they want to show. Now, Twitter's incentivized to do what keeps people on their platform, retain them, keep them interested. So they have some pretty advanced AI to like, try to figure out what's engaging and make that pop up to the top. But that's not always what you want to see. It's just what most people react to, okay? So you could fix some of that with and that effectively is censorship, because if you don't meet that criteria, then you don't pop up on the list. And it also opens the door for major problems where, let's say a topic actually does become trending on Twitter, but for some reason they don't think that topic should be shown on the homepage, right? They could just censor it, just turn it off, okay? So that's another way that you could have a protocol. And that way, we've had a lot of people call BS on these types of things. You might have seen these debates happen online. Well, how come this isn't trending on Twitter? Or I saw this thing trending on Twitter, but there's only like 100 posts about it, right? Well, if it was decentralized and you could actually go verify all the posts that went through, you could effectively call BS on something that's trending compared to something that's not and say, hey, why is this not the case, right? There's all this transparency. Now, that auditing may be insanely hard to do, but the fact that it can be done is still big. Yeah, somebody says there's actually a comment that there's a comment that got held for review on my live stream. It said censorship can be good, and they gave a pretty extreme example. Yeah, like violence or anything like that. Like there could be lots of reasons why you might not want to see something in social media, but you could opt into that. But you could still. The whole point is the trust minimization and the transparency, so that censorship in effect could be audited by someone else, right? Okay, so let's see a couple other things that are coming up. So we can actually check on what's going on with the Ethereum burn over the last 30 days. I saw this tweet come up this morning, and I wanted to pull it up because I thought it was pretty crazy statistic. So Ethereum generated $1 billion of revenue over the last 30 days. That's in terms of the fees paid to the protocol itself through gas fees. And it burned 82.45% of that revenue. All right. So here's the actual statistics here. So users of Ethereum have paid $1 billion in transaction fees the last 30 days. And basically, the whole point here, that value is essentially returned to token holders. The burn mechanism is similar to a stock buyback because it decreases the amount of tokens in circulation. So this is something that I've talked about a little bit on the channel, but I want to drive home this point here because I think it's such a big deal, which is basically ETH's burning mechanism is like a reward to people who hold ETH, right? So think about like a network fee. So whole idea here is we've had this EIP 1559 upgrade where basically fees are burned whenever new transactions are created. So anytime I send ETH from my account to yours, or I trade on a DEX, whatever, buy an NFT, part of that transaction fee gets, it gets split up, and then part of it gets burnt and erased from the network. And whenever that gets erased from the network, you can think about it like that's benefiting everybody else because the amount of new ETH in circulation is going to be less than it would have if that transaction was not created, okay? And so right now, ETH is, that's mostly slowing down the inflation of ETH, okay? So because you can see over $1 billion in transaction fees are created over the past 30 days, and that's 82.45%. 82.45% of that was burned. So if you look at this, right now, roughly speaking, ETH is only about 2.24% deflationary, which really it should be about 4% based on the block reward. And if the merge is going to happen, then at the current ETH levels, or so at the current activity levels, ETH would be negative 2% inflationary or 2% deflationary per year. And you can see the latest burns here. So here's a deflationary block. It looks like the network activity isn't that crazy right now. You need to go north of 2 ETH per block in order for it to be deflationary block. So here's a deflationary block, here's a deflationary block. So sometimes I check this on the live streams and it's like every block's deflationary. Okay. So another thing to check on is what's going on with the ETH L2 space. We can check on the TVL. We're at all-time highs. Part of this is a function of the ETH price itself and other crypto prices, but part of it's also just the fact that layer 2 adoption is continuing on. One of the big predictions I made at the beginning of this year was that we'd see wide layer 2 adoption in 2021, and we're approaching that. Okay, we're getting there. I think we'd all like for this stuff to go faster than it is, but that's the nature of building really complex technology like this. But we're still seeing this adoption happen. You saw a big dip right here, but like I said, part of this is just a function of cryptocurrency prices. That's what happens when you use TVL as a metric like this for adoption. It's not about transactions. It's not about units of crypto locked or transacted. It's just about US dollar value, and that US dollar value is going to change as the prices go up and down. So we still see Arbitrum, DYDX. Everything's green because crypto's going up. So But one important point I wanted to bring up here, I saw this tweet come up and I thought it was good because I don't think people conceptualize this often enough, which is what people are missing about ZK rollups is that not only are they not only they allow super low fees and high scalability, but they also give smart contract developers way more computational power than it's currently available. So this will enable a true new generation of blockchain protocols. So this is a pretty good take because this is something that's important to understand. So we're talking about scalability on blockchains. So the whole idea for layer 2 scaling solutions is to solve a problem that a lot of people who have actually used layer 2, who have used blockchains in the first place, like Ethereum or Bitcoin, they understand this very intuitively, which is it's kind of slow. And they definitely see that it's expensive, all right? So they go try to trade a token on Uniswap, buy an NFT, whatever, and they're like, hey, I'm paying, I want to, just spend $100 on this token or like, on an NFT or whatever, but my transaction fee is going to be like $200. Like, it doesn't make any sense, right? So that they see that's expensive, and they also see, okay, maybe I bite the bullet and do it anyway. Well, it took like, minutes for this transaction to confirm. So that's a no-no for a lot of people, and rightfully so. So that's the problem that layer 2 scaling solutions solve. So people ask me all the time, hey, is ETH 2.0 going to fix all this? So the answer really is no, it's not. It was never intended to fix all that. That's what the layer 2 environments have always been about, is basically creating the second layer where you can offload all these transactions and actually get this scalability benefit to solve these pain points. Now, that's the main thing we've been focused on. And it still is. But one benefit that is often overlooked, and that's what's talked about here, this tweet, that's why I brought it up, is that with ZK rollups in particular, this is one type of scaling solution that it's not just about getting super low fees and high scalability, although that would be amazing to keep doing exactly what we're doing with blockchain and make it way better, doing DeFi, trading NFTs, playing video games. But they also give smart contract developers way more computational power than it's currently available. And that's key, because this is actually going to open up the door for what you can actually do with blockchain-based applications. Now, if you're not super technical, maybe you don't have an extensive programming background yet, maybe you've been watching this channel trying to get into technology, become a programmer, become a blockchain developer, whatever your background is, maybe you already are a developer, maybe you just don't understand this. It's okay. It's basically like smart contracts really aren't that powerful computationally speaking, or at least maybe the EVM, I should say, is not that powerful computationally speaking. It's not really supposed to be, and in the sense of like what you can just do with an actual smart contract itself, all right, with a reasonable amount of gas fees. So the whole point here is that with something like ZK rollups, you can greatly enhance the computational power for what you can do with that beyond the capabilities of like, a really advanced calculator or something. This is not a perfect analogy, but I'm trying to help you understand, like, what you could do with a very simple computer with a much more advanced computer. And yeah, it's a big difference. And the whole point is that it's going to open up applications for new things you can do with blockchain. And that's one of the biggest problems with crypto. You see all these people like promising that this technology is going to change the world, and I firmly believe that it is. But you have to actually have a pretty deep understanding of the technology to know what currently is possible and what currently is not possible based on the tech as it exists today. And there's lots of things that are not possible based on the tech as it exists today because of this particular type of limitation. And I'm not saying blockchain will solve every problem on the face of the earth. There's probably be some things that just will never be good at. Or maybe there's a better tool compared to how you could do it with a blockchain. But this is one way that's actually going to open up the gate for lots of other things. All right, so let's get a couple questions here before we wrap up here. What are some ways to some safe ways to make my portfolio work for me while I hold or hodl? So I gave you some ideas, of course, not financial advice. What would I personally do? I guess I'll frame it that way. What would I personally do? I mean, there's all the things you can do. It depends on the cryptocurrency I would be using. There are centralized services that lend out crypto. Then you can supply for that. You can do DeFi with it, all types of stuff. It just depends on how much it is. Sometimes the risk reward's not really that worth it for people, honestly. Sometimes just holding it is good enough. Do I know how long and why does it take so long to transfer funds from Voyager to MetaMask? I don't know exactly. Most likely got to do with the network fee that they're paying to transfer those funds. I'm assuming that Voyager sets the gas fee, so they're probably just setting the gas fee low. If you could start a company in blockchain, what would it be in? At this point, I would just like throw a dart, pick something. I would say if you're asking for yourself, you personally, I would pick something that you have the most personal knowledge about, where you see that blockchain can actually solve a problem. As somebody said, how is something like blackmail type content on blockchain? Anyone talking about? So I have seen actually think about this, like WikiLeaks, for something like WikiLeaks, where like leaked content could be put on chain. Yeah, I've definitely seen experiments with that. Is Facebook is creating metaverse? Yeah, definitely they are. What dApps do I use frequently? Dex. Pretty much Dex is probably the most common one. Do I think futures ETF is good or bad overall for market? I mean, long term, I think it's good. Define a whale. That's a good question. I think, yeah, that's a good question. So, like, how much money do you need to be a whale? I don't know. It might be relative to the cryptocurrency, honestly. It may not just be a US dollar thing. Maybe like you're a whale, for a particular currency. So like, and maybe in order to be a whale, you need at least like 1% of the supply of that currency or something like that. I'm just kind of like pulling this idea out of my head here. Because I thought about this before. It's like, I mean, how much do you need to be a whale? Because like if you got, I don't know. So you think about an example this way. If you got like, let's say you had a token that was 100. Let's say you had a token that was $100 million market cap. That's a pretty small token. And then you had like $10 million of that token. Well, you'd have 10% of the supply. I don't think anybody would argue whether you're a whale or not with that cryptocurrency. But if you had like $10 million worth of ETH, that's a lot of money. But That's not a drip in the bucket for the ETH total supply or the ETH market cap. So somebody says, what are you referring to as the titles of historic day for crypto, highest weekly close, and the ETF? And that is something that I didn't talk about, was we did have the highest weekly close for crypto. You can actually see that. I'll pull it up in my chart here. Let's see here. See if I can actually... I'm trying to adjust the chart so I can actually look at the weekly candles. Let's see here. Yeah, my chart's kind of acting up on me. You can just take you can take my word for it, or you can look it up. Somebody else's chart. There's lots of good chart makers out there. I'll add a big technical analysis anyway. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel, and if you haven't already, that really helps these videos out so that more people can learn about blockchain. If you're as fast at this technology as I am, you want to get your hands dirty, how to get started today. You can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be experts to get started today. I thought people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp University.